With that, let me introduce my other panelists. Like I said, I'll be monitoring the chat and jump in with questions, but mostly we're going to be listening to Trustee Jan Senchnich from Vermont, and the person we're all here to see, which is John Swinski. John is a CPA. He does outside accounting for some of us, including Jan. He's also been an auditor for Chapter 12 and 13 and has done my audits. So he's real familiar with this process, both on the Chapter 12 and the Chapter 13 side. So with that, Jan, I don't know if you wanted to have any remarks. Otherwise, we'll turn it over to John to just get started. And like I said, be sure to ask your questions either out loud or in the chat.
Sure, just really briefly, obviously the statement of work is an important piece of audit prep. Knowing what the auditors are going to be looking for is, 95% of being ready for an audit. And so being familiar with that is really important. And for those of you that are Chapter 13 trustees, not all Chapter 12 trustees are, of course, it's pretty similar for 12 and 13, but it's really key to know the differences. And so John's going to talk about that. Because there are some differences, and yeah, John's my account, and so thanks to his support and help, I always feel like I'm pretty well prepared for audits. So with that, John, share your wisdom.
Thank you, Jan. Appreciate the compliment. Thank you, everyone, for letting me kind of give a rundown of what the statement of work is. It's almost as long as the 13. But there's some differences, and it's basically related to employees and stuff like that. We can get to that when we get to later on. But if you go to my little presentation, I just wrote down the points, and we can just kind of go through each of these and discuss what the auditors are looking for and what they need to complete the prescribed procedures report. So right out the bat, they start with our employees or segregation of duties and our controls over computer operation. Very similar to everything that they ask on the 13th side. Number one is the same 4-page matrix. So we got to put the people that are down. A lot of 12s either allocate trustees or share employees, or I'm sorry, share employees or allocate employees from either their law practice or their 13, that's their Chapter 13. So we have our four matrix parts: the physical control over the assets, the reconciliation controls, authority, and the last one is the accounting control. So you have to go through, and this is more the physical actual duties, not so much the computer. There's some lines that ask for computer access, but this is more of the physical every day, what's going on, who's doing what. You can put the X's in there, or you can do the primary and the B for backup. But usually it's usually, a lot of times it's the trustee, maybe 1 or 2 employees that are either with the law firm, like I said, or an allocated employee from the 13. Then we get into the computer user profile based on your system. What administrative system we're using for the trust. We have the various reports, so give them those reports. 3, from that, how do you limit the access for all these employees? Some do it by employee, others do it by putting people in certain sections, the posting section, and then there's our case admin section, and then our closing section, or we actually assign everyone and do every individual. But it's based on your system, and this is really the computer control of where you limit your employees' access. 4 is the same as changing our password. What's our policy? Both for our trust administration software and for our everyday operating software. Next one is just the controls over where all our servers are and the various computers. Very similar to the questions that you get on the 13th. Agreed upon. 6, your backup procedure. Well, how are our backups? Where are they done? And the main thing on this one is what they're looking for is that backup gets tested sometime during on a rotated basis, quarterly, monthly, yearly. We want to make sure that someone's looking at that backup to see that it was done, that you can rely on it. And then 7.
I'm going to sort of jump in here because I think when you mentioned number 5, controls over physical security of computer hardware, for a lot of folks, that's probably sort of a no-brainer. They have a server room and, you know, it's a locked server room, which is something I used to have before I downsized to this tiny office. And just a little sort of audit write-up I got when I downsized. My server room is actually that bookcase. Behind the bookcase is where my server is, because that's the only place I could find to put it that was somewhat secure. And I built a rack to put it in there. And I actually had a write-up on the audit. I think it started on the 13th side. Is there was a security issue because someone could just come into my office and access it. So I basically ended up putting a screen door on the server rack with a lock, and that took care of it. Not that if someone broke into my office, they couldn't get in there, but the idea is that it kept someone from being able to just casually walk into the office and access the front of the server. So there's actually sort of things you can sort of think about in how your office layout works, and whether it's real complex, like a bigger office, or it's very simple, like a really small office. It's still something that auditors can ask about.
That's a good point, Ken. Not only the security over it, but is there enough ventilation, the cooling, and that kind of stuff that goes along with it, that those servers heat up, so you want to make sure it's secure, but it's also not going to have any problems with the environment that it's in.
Yeah, and there's actually a temperature alarm behind it. So I have to keep my office sort of comfortable. If it gets up to 80 degrees here, then the security company gets a hold of me and says, you know, your server room, which is my office, is overheating. So little things like that, the auditors like to be aware of.
Hey, John, have you had, I know some, at least 13 trustees are talking about moving, at least their 13 operations, and it might be true for those of us who are both 12 and 13 trustees, moving their servers more to a cloud-based system. Yeah. Have you encountered that at all? Are there any pros and cons to it? Is it something that's just still on the radar yet for you?
For me, I haven't had any clients yet do that. I did audit a couple that had the cloud, and it's fine. It's just the security over and the protocols over the cloud, and it comes down to your maybe the trustees feeling on that. And the cloud basically now gives you unlimited ability to store stuff, and you know, with the imaging that's going on and all that, people were running into, you know, dollars for servers and maintaining it, and maybe even staff wise. If you move to the cloud, I know we have it all, and ours is all cloud based at my accounting firm for all our programs. It just helps out with, we don't have an IT department really here. You know, we appoint a couple people, and then we always have someone local IT specialist that we can call in. But storage wise, I think that might be one of the reasons, and it just seems like it's the progression of the industry, of all the IT industry. A lot of it's going to cloud.
Yep. And but as far as audit, as long as you have the appropriate controls and who can access or get into it there, that's not an issue with the audit from audit.
Yeah, it's kind of like the cloud is like your computer. Think of it as your cloud is your server room, and how do you access to that information, and who can get in there, who can even online, who can get in it, and how are you doing the backups? Are we looking at the backups, making sure they're getting done?
Thanks.
So that I think it's coming. I'm probably going to hit the next. I think the pandemic kind of stopped that for a lot of people to make a big move like that during when we don't know what's going on with cases and filings. So if we kind of go back to normal, I think you'll see a lot of people going to that. And talking of the pandemic, number 7, that was kind of this question of this written disaster plan. How can you pick up and work if something happened, but on the other part, what happens when no one can go to the office to work anymore? Or, you know, did we have in our disaster plan, how are we gonna access the courts? How are we gonna do all the stuff that we had to do over the last 2 years? So just update your disaster plan when you can. I know a lot of offices, the NACTT had a nice kind of boilerplate plan, and you can go tailor it to your office.
Yeah, and I want to vouch for that, because when I first had to create one of these in response to an audit, that template that you can get from the gosh, it's the foundation, right? That
Yep.
the NACTT Foundation people can provide it. It made creating it really easy, because we just go through it and plug in the specifics to your office. But the whole structure, the whole template was there, and it made it very, very easy to create that from working from that. So if someone doesn't have one of those, I recommend it, because that was that will be definitely an audit issue if you don't have one.
And then the last 2 points under here, third-party access to your system. So how do you control who can have access to your live system? Either your network consultants, your like I said, your trustees software supplier, or they need access. How do you limit that? And then 9 is, can third-party people that can access some information on a case? You know, you let them into yours and you have them go to a third party. And how do you control that? And how do they get it? How do they get access to that? So the difference between 8 and 9 is who can get on our live stuff, and do we allow information out there for interested parties to go review the case information? So we just want to make sure we have our controls in place. That it's not an open door, to get to this live data, which has all the information that we all talk about for what we had to deal with, protecting this personal information.
And now that, for those of you who have taken advantage of the fact that Chapter 12 data can go out to the NDC, I believe that's the number 9, the third party access to case information. So that falls under there. And if you have questions about getting your stuff on the NDC, please reach out to me, and we'll get you what you need to get on the NDC as well. So, all right, thanks.
So then the next section gets into the actual case monitoring. Very similar to what they ask on the 13th side. Do we reconcile our caseload? A lot of people do their monthly stuff, but then do we actually at one point in time say we have X number of cases compared to what the clerk has, and do we do a reconciliation? Number 11 is, how do we monitor the accuracy of our case information and the completeness of our case information? And this, there's different terms, different offices. You have your bar day reviews. You might have a even 12-month review, halfway review, and then of course maybe a closing audit, stuff like that. Very similar to what they ask in the 13. How do we do this? When do we do this? To make sure that that data is correct throughout the case. I was just going to turn it over to Jan to talk about the case status report that he prepared.
Yeah, we're just talking about, for some of you, you may come up to a point where the UST is preparing to do your sort of biannual evaluation. And I just hit that point this month. And what's interesting, the time frame they use for that, at least where I am, I don't know if this is consistent across the country, but I assume it is. It doesn't line up with any fiscal year. It's actually March 1st of 1 year through February 28th of 2 years later. So in my case, it's March 1st of 2020 through February 28th of this year. And so one of the things I've been requested to provide is essentially a sort of status report of all of the cases I have that have opened within that period of time. Now, what's interesting, I have other cases that are older. apparently they don't care about those. I don't know why they wouldn't ask for all of them, but that's okay. So I can give them, my software, CMC, can produce a list of cases that were opened within that time period with several different columns of the case name and the debtor's attorney and all that. And I can actually export that to Excel, which creates a spreadsheet. And then I can just sort of plug in a column with the case status. Is it current in payments? Are they current with operating reports? Is it confirmed or not? Are there other issues? And I just actually finished that this morning. It was really very easy because I can start with this format, and I tend to try to do that every month or 60 days at least. So that's my way of tracking delinquent cases. And the point about delinquent cases, there's obviously, like in Chapter 13, are they current in payments? But there's also the thing we don't run into quite as much in Chapter 13 is operating reports. And it's a nice way to keep track of when's the last operating report that came in. Are they current on those? Because I've got a lot of farmers that are much better at making the payments than they are doing their paperwork. And so they may be current in the plan payments, but they're behind a couple months in operating reports. So that technique actually helps you in preparing for those evaluations and also helps you keep up with cases on a regular basis, which helps you for the audit. And I can show you what mine looks like, right? If you can see the screen, looks something like that. It's got all the list of cases and a little report there. So.
And Jan, we had a question. So it's only cases open during that period.
Yeah, that's what the email from my coordinator is. They want to see the status of the cases open within that period. So that's what I'm giving them.
Yep, and that's for the trustee evaluation. The audit is
Right.
either all the cases or all of the sample of what they.
Exactly. And so I try to do it on a regular basis for all the cases, because when you come up to an audit, that's what the auditors are going to want to see, that you're monitoring all the cases in that fashion.
Yep. So.
All right, I don't know if you guys, hopefully this distraction, it's actually a nice day today in Buffalo. Looks like our landscapers are out, so hopefully they're not too loud. So like you said, Jen, that by looking at those cases, it's going to touch a couple of these, and auditors like to see that you're reviewing cases, and it might hit a couple spots here, like the next one, negative cases. If we have any negative balance, and then especially 13 is the one that they really like us to look at. Is the accumulation of debtor payments. Why haven't they been out? If we have cases with a balance, it started with a number, a dollar amount, and then they refined, agreed upon to say 5 months payments that's been at least confirmed for 5 months. So that'll catch not only dollar amount, but it might catch something in your process or policies that a case gets slipped through the cracks. So they just want to make sure if it's not a big dollar case.
And I know for me, one of the things that can come up that'll create one of those big balances where you have to hold funds, and I don't know if, I assume other people have run into this, is when you have the deprioritization cases where you have to get through the process of the sort of comparative IRS returns to deprioritize an IRS claim that would otherwise be priority. You basically can't start dispersing to the unsecured creditors until that process works its way through and you know what the IRS unsecured claim is going to be. Sometimes that can take a while. And so, but that's an easy thing to put down on your report, saying we're holding funds until this deprioritization process is done and then going to disperse. But
and Jan, do we have a question?
Well, I was just going to make a comment that I've had several deprioritizations. One, I finally got appealed. I had closed the case and still couldn't disperse for about 1.5 years. Finally got it dispersed. As long as you tell the U.S. trustee that you're holding for deprioritization, they know you can't disperse to the unsecured creditors.
Yep.
right.
And that was Joe Black from Indiana, in case anybody else didn't recognize his voice. And I will say I've had the same thing. It's helpful what I've been able to point to is if an attorney needs to have that, I make sure that language about the deep prioritization is in the plan. And there is plan language that I've agreed with my debtors attorneys about the requirement for the trustee to hold the funds, which is another thing that I can point the auditors to, saying the plan says this, the plan is confirmed. I have a court order that says I have to hold this money. So if you don't do that, that might be something to consider.
Good point.
And that's what we're looking for. We're looking for, you know, a reason why these funds are here. All right. And then 4 is suspense account, suspense adjustment account. Do we use it? How do we control it? Who looks at it? 5, monitoring. Do we monitor our delinquent cases? You know, that touches bases on when you're reviewing your cases and so forth. 16 and 17. Now these are items that are just in the 12. They're not in the 13 statement of work. Because it's kind of, you know, a little different here, but 16, obviously, how do we keep track of our cases that are going to go over the 450,000? So we like to see policies, procedures, how we track those cases. Is that a function of can we use our systems to do that, or do we have to think of a different way to keep track of that? And 17, constructive receipts that are outside of, you know, how do we keep track of that? How do we compute our fees? What are our policies and procedures on that? How do we track that? So those aren't in the 13, but like I said, they're in the 12. And then finally, under case monitoring, what are our procedures for closing cases? They're probably, you know, we have to sample probably a couple of refunds. So they'll be looking through maybe cases that close, they'll look at the refund there, and they'll make sure that we're doing what you tell us your procedures are. You can see it documented in the case information. Then we get into some of the running of the actual, you know, numbers and the accounting side of it. You know, what are our procedures for the bank recs, proof of cash, both trust and expense, and then we have to test it. Here they only test one, you know, one other one in the year-end one. 13, you got to do 4. You got to do 4 total. So a little less on the trust here. Same on the expense, just 2 year-end and another one.
Hey, John,
Yes.
we've had a question. Can you explain constructive receipts and fees? And I know, you know, if you don't want to do that, I know someone who takes a lot of constructive receipts and gets fees on them. I think Jan, you do sometimes, so I'll turn it to you first. I know Joe Black does a lot of that with sale plans. So can you, John, maybe Jan, I'll start with you. Can you kind of explain how a constructive receipt might work?
Yeah, I first of all, I try to avoid those and try to get everything to come through my account whenever possible. And that's like a whole nother discussion. But occasionally something, the one I have on my report now was really a real estate attorney that didn't get the memo, and I sort of let it slip through. And so there was a major disbursement that went directly out to a creditor. I try to prevent that, but and I had to talk to John about it. It's like, what do I do? How do I get my fee on that? Well, it counted toward my 5%. That's the main thing. I didn't actually take I didn't get to take a fee out of those funds because they didn't go through my account, so I had no opportunity to. But it did get, when John does my my monthly report, it does list that on a separate category in the monthly report, and he counts that into my total receipts for purposes of the 5% compensation. And so that's why it's sort of important, even if you're not actually getting a fee out of it, you want that number to be part of your 5%. So if you're being limited by 5% of your receipts on your compensation, you can bump that up a little bit. And so, yeah, that's one of the differences. If there's money that's being paid through a plan that's not going through you, it still would count toward your 5%. So John, do you want to elaborate on that or correct anything I misstated?
Well, I can speak to the accounting side of it. Maybe Joe can go into the legalese, but these are, you know, like you said, disbursements that didn't run through the plan. And either you're allowed a fee on it, if they, so you'll be waiting to collect that fee, so that fee will just come into your chapter 12. Or in the case of Jan, he wasn't allowed a fee on it, but what did count towards as a receipt. So it's almost like a no fee, you know, it'll be a no fee one, but you're allowed to use that into your calculation as if that was part of your receipt base. So he can, you know, get our number up on a 5%. To make sure that he, you know, he counts towards how much compensation he can get. That's the accounting side of it. I can't really speak to the legal side. Maybe we'll leave it up to back to you, Rebecca, or Joe, or whoever else wants to speak up.
Well, my plans allow the debtor to be a dispersing agent occasionally on payments under the plan that I get a fee on.
Okay.
And all I have to do is get a copy of the check or have the creditor write and say, we've received this payment. And then they pay my fee directly to me. I only get 5%. They don't allow me to take anything over by 5% anyway, but that's worked rather well. There's actually a line item report on the monthly report that I fill out every month that shows each case that I've received a constructive receipt on and the amount. So, and the auditors had no problems with them saying, you know, here's my backup. And they said, okay.
Yep. And that's my understanding. It doesn't happen for me a lot, but yeah, if you do have, it's more common, like there's a sale or there's something paid direct, and what fee would you have gotten had that gone through your office? And then like Joe said, there's just a line item on the monthly report for it.
And for me, when it comes to sales, both in chapter 13 and chapter 12, and I actually learned from SunTrust, now Truist, that they tell me I'm one of the only trustees that do this, but I do wire transfers in and out from closings because I've always had an interest, because I've been a really sort of small scale trustee, to try to, when there's a sale, make sure I can get those funds to go through me. And that started in chapter 13. And once I sort of got to know and made sure the sort of real estate attorney community knew who I was and got used to it, I just send out wiring instructions before a closing, and I get a HUD-1, and we make sure the numbers are good, double check the wiring instructions, and a lot of the closing funds will go through me, both for 12 and 13, which I like to, you know, for an accounting standpoint, I can show that the plan's completed because it's all showing up on my final report, all the disbursements. So.
Hopefully that answers.
And if you do bank with Truist, by the way, they now have a much more sophisticated controls on wire transfers. You can actually sign up with them to get a PIN, and they have a fairly rigorous sort of back and forth confirmation process to make sure it's actually you doing the wiring, and they send you a text and you have to respond, and they give you a code and everything. So that if you're interested in doing wire transfers, you can definitely talk to them about that.
Okay. So after the proof of cash, you know, do we have positive, same as the 13, the question, do you have positive pay, reverse positive pay with your banking institution? Positive pay means they're going to match, you know, multiple items on that. Reverse positive pay, they're going to catch something, they're going to let you know, they're going to catch it unless they hear something back. Then we get into the same thing in the 13 as the 12, but here we're making sure that we're going to, based on the ABC ratings of our employees, you know, A being, we got to bond them 50%, B being 20, and C being anywhere 0 to 10%. What our bond is for our commercial coverage, our employee bond, whatever we get. The main thing there is to make sure that even if you don't have employees, people working as if they're your employee, are covered under the bond. So that's something you have to make sure you get worded in the bond agreement. Or at least talk it over with your agent to make sure that people that are working on 12 stuff are actually covered under the bond. That was the next point. And then this is similar, but it's from a different section, but they put it here on the 12 side. You know, do we have any fixed assets? And do we have some sort of, you know, coverage? If it is a 12 asset, then, you know, we'll see the insurance. If it's what I do in the audits, that they're not a trustee, you know, I ask them, usually it's not a trustee asset, it's their law firm asset. I just kind of ask the question, do you have insurance on your law firm? And you don't have to share that with an auditor, the actual dollar amount, but you can tell them, yes, I have coverage. And that should answer that question. And then finally, were there any claims on any insurances you have? Employee, whatever, errors in the mission, this claim, anything against? Very similar to what they asked in the 13th. They put that on their banking, bonding, and insurance.
Just to go back to the employees and the assets items, Rebecca, do you run your office pretty much with Chapter 13 trustee assets and employees, and just or is it a mixture? I mean, because for me, it's pretty much all on the Chapter 13 side, and I do a lot of the Chapter 12 work myself with minimal involvement by my staff, and I have no separate Chapter 12 assets. So I'm just wondering how other trustees do it who are also Chapter 13.
I do it the same way. I have about 3 employees who put in, put in time for Chapter 12, one of my paralegals, one of my case administrators, and then my office manager who does my monthly reports and budgets for me as well. So they work, they keep track of their hours. And then as far as assets, it's all tied into the 13. The 12 will directly buy a little bit of office supplies, or my check stock, I'll buy that directly. And that's really about it as far as physical stuff that the 12 has. It's real minimal.
But do the employees keep track of their Chapter 12 time separately? And
Yes.
do they paid separately out of the 12 expense, or are they just employed? That's
They're
the
just- Yeah, they're just employees of the Chapter 13. And how I've done it, I don't have any trouble with the auditors, is we keep a spreadsheet and we know employee X has an hourly, makes $20 an hour, and we calculate the cost of their benefits and taxes. And then they keep track of their hours, and I do this quarterly. So they turn in their hours, and then at the end of every quarter, I write it, the Chapter 12 writes a check to the Chapter 13 to reimburse the 13 for the time they spent working at 12.
That makes sense.
At my office, and most of the people in our region have the 13s reimburse expenses and base it on the number of cases that you have in each. So there's really not a whole lot of expenses in 12s, but I just take the 13 expense and quarterly saying everything other than what's specifically 12 or 13, like education or travel. And then I take a percentage that's, it's like a 0.5%.
That makes sense. That sounds a little bit easier.
I did the tracking time for a couple of years, and I said, just not going to work.
Yeah, it's based on office, and it's based on what you can do in your region. I've seen it where every bill gets split out, 95.5 or 99.1, I think one of them. And then I've seen, just keep track of time, and it's usually just time and maybe some other stuff, maybe rent that's allocated. The time is based on actual. And then I remember one, probably on the rare side, there was an office that had one person that did 12 along with the trustee, and they had all the assets. They had the printer, the computer, the office supplies were all in that office. So it just depends on the different you know, with the size of some of these, it's just maybe not feasible, but a quick allocation is fine. Maybe based on cases over, you know, total cases or the actual time. So then we get into receipts, and this is very similar to the 13 agreed upon. What are your procedures? And give the auditors your procedures, let them see it. They gotta observe it. Procedures for, you know, like going back to those constructive receipts, the items that what we call exception items that aren't the norm are always what gets drawn attention to and we gotta talk about and look at. And one of them will be our return checks. Normally we write our checks, everyone cash, everyone's happy, they take their money. What happens when our check comes back? You know, what are their procedures for that? How else do we get receipts? You know, now we have a lot of the automatic ACHs, the EFTs going in, you know, does everything have to come up back through here? They have to do their testing, so they're gonna test, you know, sample receipts from some cases. You gotta show them how you reconcile every day, what you're making deposits to, what's booked in your ledger. And then procedures when you get an NSF check. And then what are your procedures for miscellaneous receipts to expense? This item was gotten rid of in the 13th section. There's really not really any kind of like selling of assets and stuff like that, or really maybe a dividend refund if you still have one of the life insurance policies for your employees. Very rarely we have various different kind of miscellaneous receipts to the expense fund, but how's that handled? And then of course, the old interest issue, where do we put our funds? Is it interest bearing or not? On pre-confirmation, do we do the calc and do we refund interest? And one more step from that, if we do that, if we do all those steps, then do we go ahead and follow the IRS and issue the 1099 of interest if we do refund interest? That's
Question,
go ahead.
on that pre-confirmation, you know, in chapter 13, I actually have a separate pre-confirmation account. In
Yeah.
chapter 12, I just have two accounts, expense and disbursements. Rebecca, do you get much pre-confirmation, and how do you separate it, or do you put it in the same non-interest bearing disbursement account, or how do you do that?
In 12s, I because the plans aren't due for 90 days, I don't, to date, can't remember that I ever got any money pre-confirmation in the 12s. In the 13, because of the interest rate now, we don't have a separate pre-confirmation account. We allocate it on the, you know, this much is pre-confirmation, then this much is confirmed, but we don't have a separate account for it anymore.
Yeah, and if there's no interest being paid either way, then it doesn't make any difference what account, because sometimes we get pre-confirmation payments, but there's usually an adequate payment order to disperse. So it's going to go into the same disbursement account anyway, so.
Yeah.
Yeah.
A lot of people have gotten rid of their, I mean, I just put it all in one account because they're not paying interest, so. You have to worry about transferring, you know, back and forth. On the 13th side, you know, where they have some pre-confirmation money. Then we get into disbursements, and it's very similar to the 13 also. What are your procedures for both trust and expense? They're gonna have to do some debtor refund testing. They're gonna do some testing on regular disbursements, trust disbursements to creditors and attorneys. They're gonna maybe test whatever expenses you do have. And then your procedures for stale dated checks. Who are your authorized signers? And if you do get interest, when do you make the transfer? Back and forth. So that's all very similar, just a regular disbursement process. And then this is where they really shortened up the agreed upon between the 13 and the 12. They got rid of the trustee compensation, the credit card question, the budget to actual question. And they kind of came in still doing payroll taxes. If you have employees, if not, who's doing the payroll reporting, who's doing the taxes? Do you have any leases or obligations, or any benefits on the 12 side? What are the agreements? You know, 42, you know, the question everyone gets in an audit, is there any pending litigation? Doesn't matter if you're, I go do an audit of the guy that, my manufacturer, or go do an audit of the 13, or go to an audit of the 12. It's still, are you, you know, what's the potential? Is there any litigation out there? And then 13, I don't know if it's applicable, but you know, do you have benefit plans and trustee participate? And then 14, any complaints against the trustee or employees and so forth. 4, 5, the other question that, this is probably the USD's favorite question. This is what they're looking for, the use of the funds. Anyone use them personally? And then lastly, failure to comply with program policy or any state, local law. That's kind of the same as 13, but this is the kind of boilerplate that's down into there.
All right.
Open for questions.
Yep. We had a,
Or any other comments you guys have?
yeah. We had a couple going back. I did post the 1232 language that's in my plan. The main chapter 12 plan to the list. So if anybody wants to see that. And then I did get a question if I have a plan template that I require attorneys for debtors to use, like in 13 for 12. And we don't have a required one, but honestly, I have 4 attorneys, maybe 4 different firms that do chapter 12. And so there's nothing formal, there's not a local rule, there's not anything like that. But you know, whenever something comes up, I just email them, and they all kind of use fairly similar plans. Probably not one of them is a little different, but and I'll occasionally send them, hey, we had this issue come up, and can you please incorporate this into your 12 plan language? So it's kind of evolved that way, but real informally. So, Jan, did you have anything? You know, we're at about 45 minutes, and we can certainly answer other questions. I'm just scrolling back up the chat to make sure I didn't miss anything. But did you have any other questions?
Yeah, one of the things I was wondering, like, Rebecca, do you do all of your dispersing in chapter 12, or do you have any other authorized people? Like, usually I know larger offices in chapter 13, there are other people. I'm a small office, so in both sides, I'm the only one that has any authority.
Yeah, I do it all in chapter 12, and actually, so since, you know, we used to do it a little differently pre-pandemic, but once the pandemic started, there's 2 other folks and me in the office for 13 disbursement. And we usually do it in the evening. So people, you know, like we'll start at 4 and we'll be done by 7 on the 13 side. And I just do the 12s at the same time. So it's somebody's printing 13 checks and I'm in here printing the chapter 12 checks, and we get them out the door.
Yeah.
So, yep. Yep. And
Looking at the chat though, I've seen it both ways, where the constructive receipt only gets the 5%. And then I've also seen it where they get the full, whatever the full trustee percentage fee is. And then of course limited to the 450,000. So I think that's, I don't know, court by court or district, or maybe even region by region. That might be.
yeah, so yeah, I think, you know, in general, if you think about it, the compensation is the order that I get in 12. It's, you know, for my trustee comp as opposed to the trustee fee, it's 5% or not greater than a certain dollar amount, and then they give you a cushion of about $5,000 just to make sure. Because I think there might be actually 1 or 2 12 trustees at max comp, but most of us are far from it. So that's the comp order that you get. So, you know, if you have additional expenses, you know, so right now I've been I think right now I'm 5.7 is my trustee fee. I've been at 6. Because 12 has such minimal expenses, of that, 6% trustee fee, a percent goes to run the chapter 12 and the 5% comes to me. So,
I think,
One of the other things that I'm sort of, I've learned about from Mark Swimler in New York is he has basically a dairy farm expert that he does a report for him on literally every dairy farm case at the outset, which has a cost to it. And I'm trying to ramp up to be able to afford that. I was wondering if anyone else, have you ever done that, Rebecca, or any other folks?
I have not, but I've always been intrigued by that and Mark's report, and it's like, I guess my question back to you, Jan, because you've talked to Mark, how much does that costing him? Do you have an idea of what that would cost?
I don't hold me to this, but I think it's about $1,000 per case, but it's a pretty sophisticated analysis. I mean, it's a farm visit, it's a comprehensive look at the cattle, at the operation, at the numbers. And, that's a lot of work, for $1,000. And I'm starting to see a pattern now where I've got unsecured creditors putting a lot of money into feasibility fights. And it's really irritating because all the secured creditors and the creditors that understand the farming operation are fine with feasibility. And I'm getting a sense that these unsecured creditors are basically trying to punish farmers for being in Chapter 12. And I'm thinking if I had an independent expert providing a report to me to the court, it would probably be very helpful in these feasibility fights, one of which is coming up next month. So just wondering if anyone else had any experience with that.
And we do have some notes in the chat that agreeing with you, Jan, that it's about $1,000, and their consultant has also testified in cases. And so, it can be a little less than that, and maybe more if the consultant is bringing in for some testimony, but it could, in the right case, it could be worth it. And with the farms are getting more sophisticated. Our debt limit for 12 is now $10 million. Well, $10 million dairy farm is a complex, even a 3 or 4 or 5 farm with that much debt, 3, 4, 5 million is a pretty complex entity. And so I think it very well could be worth,
Right. And the one I have the feasibility fight coming up on next month is one of the larger ones. It would not have qualified pre-change, and it has monthly payments north of $40,000. So for me to invest $1,000 for the expense account to get an expert to help with confirmation or to analyze confirmation and feasibility, it makes a lot of sense to me at that point.
Yep, and the next note on the chat is that their consultant has also gone back out if there's a concern about the condition of the animals, or because you do hear from neighbors or creditors that hey, there's a problem here. What are we going to do about this? So
That's
anyway.
definitely something that's going to be in my next budget. Take note, John.
got it written down, man.
All right. One thing that I did want to mention, just because I kind of skipped over it at the beginning. In 13, on the 13 side, we get an annual audit. It's an every year audit. That doesn't happen in the 12s. I believe it's every 3 years, because I think I'm due this after our end of our fiscal on June 30th. So I think I'll be getting audited on the 12 side this fall. And they do, when they come in and audit, they're auditing that year. There is a little bit of, they'll look, obviously, because they always do, they look at your annual report, so they'll see the prior year. But as far as like the receipts and going through all that, they're just looking at the year they're there to audit. So it's not an every year thing. And the other thing, because the dollars are so low in Chapter 12, on the 13 side, as a 13 trustee, you write a check to pay the auditors. You don't have any control over how much it costs. In 12, you also don't have any control over how much it costs, but the UST program pays for the audit. So there's not an out-of-pocket check.
Yeah, really good point about the every 3 years. I find with the Chapter 13 audits, because it's an every year cycle, I'm always thinking about the audit. I'm always sort of focusing on where am I going to be at the end of the summer and prepping. The danger with 12 is you get a little comfortable And you lose that focus of the audit. And then you say, oh my gosh, it's audit year. Now, now I've got to start doing what I said I was going to do 3 years ago. Not that I'm saying I do that, but it's a greater danger because you're not focusing on it as intently every year. So that's something to keep in the back of your mind. If you haven't been audited for a couple of years, or if you're a new trustee, there are these things called audits, and it will come once you've sort of just about had enough time to forget about what it's like, then and the next one rolls around. So this is a really good, I think, webinar to help us focus on, yes, there will be an audit, and what are you going to do to be ready for it when it comes?
Yep. And I right now I don't see any more questions for the chat from the chat, but I'll keep monitoring it. I would just first of all like to thank John and Jan for taking the time out and going through this, preparing. I think this has been really valuable. You now have a copy of what the U.S. trustee gives the auditors as far as what the statement of what they're looking for. So let that be your guide as you're getting ready for the audit. And we will look forward to seeing folks at our upcoming annual business meeting next month, as well as hopefully many of you who are at least Chapter 13 trustees in San Francisco, so we can see each other in person for the first time in a couple years, probably. Anybody have anything else?
I just want to remember those that are 13 trustees, remember the 12 is the same way. That's the prescribed procedures. You still have your annual report that's going to be looked at, and you got to verify those numbers. And that's the true financial audit is on your annual report. This is stuff that we're doing in addition that they want us to answer to.
Yep.
So,
Good point.
Good point. Good point.
thank you for the opportunity. I'll think, make sure I'll update my contact with you, Rebecca, because we did move a couple. But I want to give all that, and if anyone has any questions, they can email me or call me, or get a hold of me through you guys, or however you want.
Yep.
But I appreciate the opportunity, and hopefully I'll see a lot of people in San Francisco.
That sounds great. Thank you, John. And yeah, if you do, everybody should, if you've got the Zoom link to come here, you should have my email. So just email me and I'll be sure to forward it on to John or whoever you have a question for. So thank you, everyone. Have a good day.